Good afternoon, everyone. This is Henry Gambell with SimplerTrading.com, and in tonight's free video, wanted to propose an idea to you, or at least share a strategy that I think is very helpful, and then you can decide for yourself if it's something that's appropriate for the next 7 trading days. So as we get into the first witching expiration of 2020, which will be March the 20th. This is being recorded on the 11th, so we have the Friday coming up, and then 1 week from that day will be the first witching expiration. It doesn't always happen this way, but a lot of times into that expiration, you can kind of see a slow grind higher as positions are closed out in the front month and then rolled out into the next series. Also, it's something to look for during times when you've had a lot of volatility, for volatility to start to come in. So it makes no prediction about the next 2 days, but it makes a prediction from now into the 20th. And it says, I just think that we're a little bit oversold. If you like using Fibonacci, you might make the argument that from this swing low into this swing high takes us right into a major 618 retracement. Now it could move a little bit lower, but I'm looking at this and I am basically thinking that we don't get below $250 over the course of the next, I keep calling it 7 trading days, but until that expiration on the 20th, I don't think that we're going to be below that level. Okay, if that's something that I think is going to hold, we can come over and look at what I like doing in these situations is a ratio spread. Now, these can get a little, if something, you got to put them on at the right time. Like if the market if it crashes from here, well then I could find my spot where I either have to take a loss or where I end up owning SPY, and then I just try to ride it out for the duration. But the reason why I bring this trade to you is because if you have ever been frustrated by, it feels like the market's really getting ready to correct, you go out and buy puts, and you just can't make money with it, it's because of the extreme amount of premium in them. So what we're looking at is a 9-day out option series. You can see that here in the kind of the left-hand side of this. And if we're making that assumption of saying, I don't think we fall another 25 points, I don't think we get below 250, well, look how incredibly rich these options are. They only have these 9 days of life left, and they're trading for, $4.30. So what I like to do is come out here and sell these. Now that does imply a fair amount of downside risk. If the markets crash again, right, if we go through the same type of fall that we have already seen in the past several weeks, then this could be problematic. But since they're so rich, I look at the idea of selling one or maybe selling 2 of them and then coming back in and buying something as protection. So if this, you can just sell them outright if you like that idea. But if you're looking to do it with a little bit more protection, just buy something like the 258, and if you use this 1x2 or 1x3 structure, the trade will go for a credit, meaning that if and when we bounce, you'll make money on that, and then your maximum profit is achieved if we're at 250 at expiration. So that's one of my favorite things to look at in these high volatility environments. They're not going to be for everybody, but I do think that if you'll kind of embrace the idea of selling a little bit of volatility in a high volatility environment, that it can be very beneficial. So I hope that's helpful, and we will recap that idea in the next free video.